This happens to be the very first tutorial on the course ACC203. All right, and today we'll be talking about the nature, the scope, concept of accounting. All right, with this being said, let's hop straight into it. Okay, so I have ACC203. ACC203. All right, just a moment. Okay. Yeah. So, accounting. We're looking at the term, the word accounting. Right? Accounting. Okay. Accounting. I'm looking at the term accounting. What does it mean? All right, so we're going to be dissecting today's class. Now, when we say accounting, what are we talking about? Sorry, just a moment. Just a moment. All right. So when we say accounting, what are we talking about? Now, accounting consists of what? The process, all right? The process in what? Designing, okay? The process in designing and operating, okay? An efficient what? Accounting information, all right? The process of what? Designing, all right? Designing what? And operating an efficient accounting information system so as to what? Collect, all right? Record, measure, summarize, analyze, and therefore communicate the results, okay, of financial transaction for a particular period of time to users, all right, of this financial information. Now, there are certain things we are going to be considering, all right, that makes the definition of accounting complete, all right. There are certain things we are going to be considering. First, we need to understand that accounting is different from accountant, all right. Accounting is different from accountant. Now, accounting now is that process, all right, that process that involves the designing. Now let's first note that it is a process. It is a process, all right. Let's first agree on that accounting is a process, all right. And this process now involves what? The designing and operating. We have designing, all right, and operating, all right. This process now involves the designing and operating of what? All right, the designing and operating of an efficient accounting information, all right, an efficient accounting information, all right. And don't forget, before you have an information, you must have data, all right. It is the processed data now that becomes information, all right. If a data is not processed, it can't be an information, all right. And if you never had a data, then there is no information. It is data that makes up information, all right. Now this process involves the gathering of this data, all right, to now put it together to what? To create, all right. That putting together process is what we refer as to the operating and designing what? Efficient accounting information. Efficient what? accounting information. Now, don't forget that this efficient accounting information we are talking about, it is the combination of data, all right, at what point, at a certain point or the other, all right? It is the gathering of data at a point, at a certain point or the other, that makes up this efficient accounting information. All right? It is this gathering of data that makes up this efficient. Okay? Now, and to make up this efficient information, there are a series of things involved. All right? From the data gotten from subsidiary books, from data gotten from different book of accounting, all right, which we have subsidiary books, we have journals, we have ledgers, we have all these things, all right. It is the data gotten from all these subsidiary books that is used to make up what we have here as an efficient, all right. And before you can talk about efficiency, we are talking about accuracy, relevance, accuracy, objectivity. All right, so there's a lot of things involved in just this list alone, efficient accounting information. And I believe I've been able to say a thing or two about it. Now, it's not enough, and it doesn't end here. All right, it doesn't end here, because speaking of efficiency, all right, accounting information system, okay, all right, speaking of efficiency accounting information system, it still has to do with what? The collection of certain things, just like I was explaining earlier on. So we have now this efficient accounting information system now comprises of collection. All right, just like what I said, you collect, all right, the gathering, the collection, all right. We also have, after you collect, all right, you record, the recording, all right. Then we have the measuring, all right, collection, recording, measuring. Then we have, all right, we have summarizing and analyzing, all right. We have summarizing, all right. We have summarizing, all right. Then we have what we also call analyzing and communicating. Okay, we have analyzing, then we have communicating. Okay, we have communicating. Now you can see how these things follows each other. After now who do you communicate it to? You communicate what? You communicate the results. Okay, communicate what? The results. Okay, communicate results. And who do you communicate these results to? All these things culminate, right? All these things culminate into results, and this result is highly essential, is highly required, is needed, used, all right, by who? By people referred to as what? Okay, communicate results of financial transaction for a particular period of users. Okay, period to users of financial information. Now this result is what? Time bound. All right, this result is time bound. All right, it is the result of all financial transactions. All right, this is what I call the data. It's the data, all right, that we refer to as financial information that we collect, we record, we measure, we summarize, we analyze, communicate. All right, as the point of communicating is already a result, right, to who? Financial users. All right, and these financial users use it to what? Determine, all right, the financial situation or the financial level or the financial well-being. All right, they use it to make what? Decisions. All right, make informed decision. All right, that's financial. Okay, users of financial information. So So let's categorize them as users of financial information. All right. So you can see how this whole thing goes. All right. From the process. All right. It moves. All right. Efficient accounting system. Then it comes here. Then it comes here. Then it comes here. And then it goes from a process. It goes to operating and designing. From operating and designing, it moves efficiency. All right. Accounting information. All right. And this is only possible after you must have collect, record, measure, summarize, all right, you analyze, all right, you communicate, all right, the result, all right, to users of financial information, and this helps them to make informed decisions, all right. So you can see how all this works hand in hand, all right. So how everything works hand in hand, all right. So we have that as that. Now let's proceed. So we have accounting is as well said to be what? A discipline. All right? It's a discipline. Okay? And this discipline involves what? Recording, you classify, then you interpret financial information. Okay? Let me erase this. Let's try some other analysis. All right. Now, just a moment. Let's see accounting now as a what? As a discipline. Let's look at it from the angle of it being a discipline. Okay? Now, a discipline. Okay? Let's see from the angle of being what? A discipline. Alright, now this discipline involves what? This discipline is characterized by some certain things, and these things are: one, this discipline involves the recording. Alright, yeah, recording. Okay, after you record, before you can record, you must have gotten enough data. You don't just record empty figures, you must have gathered the data. Just a moment. All right, before you can say you are recording anything, you must have had gathered facts, and that's what I'm referring to as data here. All right, record, then you classify your facts, you classify your data. After you classify, you interpret. There is need for interpretation. After you record, you classify. All right, after you record, you classify. That is a classification. Okay, do some classification. Just a moment. Right? When you record, you classify, then you what? You make interpretations. All right, then you make interpretations. Marker. This should be green, black. All right, recording, you classify. As soon as you classify, then moment. Okay. think we are good to go. Network is pretty bad now. Okay, yeah. So as soon as you record, okay, you classify, all right, then you describe, all right, by making your interpretation, all right, you make interpretation of financial information. Make interpretation, all right. When you interpret, you make interpretations of what? Financial information, all right. And this financial information is applicable to both trading and non-trading organization, meaning that both profit or non-profit making organization, all right, about the economic activities of an organization. And that's what everything boils down to: what information are we? Where are we at the moment? Right? What's our financial status? It is this financial status that organizations use to make further decisions, whether to start a new capital project or to hold on. All right. So it's very important to have all these financial transaction information. All right. That's why you can see you record, you classify, you interpret. Okay. Financial information. Okay. Financial information. All right. Now the point here is, just like as I said earlier on, get the concept. When you get the concept, it will be easy for you to, all right, fix in things. Okay. And whether it's a profit or non-profit organization, this thing is an accountant. All right. So we have trading or non-trading organization about, all right, the economic activities, right, of trading or non-trading organization, right? It involves, when we see economic activities, anything that involves buying and selling, right, employing of people, employing of personnel, right? There's a way all these things tells on the economic directly or indirectly. All right, so all these things, all these activities are right to be carried out, right, and observed by an accountant, right, and all these processes is done, all right, so that there can be an accurate decision that can be made based on all these processes. Is just because of one thing: making of accurate decisions, right? Making of what? Accurate decisions. Accurate decisions, right, to enhance all these economic activities, financial information, interpretation, classification, recording, or everything as a discipline is all dependent on getting what? Making accurate decision based on the information provided, right? Based on the information provided, right? Based on the information provided. So we have that. Now let's proceed. Now, accounting, okay, is also, all right, the process of collecting, recording, presentation, analyzing, interpreting financial information. Let's not forget the keywords here are, all right, keywords here are: gather the data, all right, gathering this data, gathering this financial information is time bound, all right. You gather it. As soon as you gather it, you do your analyze, and you analyze it, right? You analyze, you what? Before you analyze, you must have recorded, all right? You must have, right, recorded. You must have been able to what? Interpret, right? It's a combination of recording, all right, presenting, analyzing, and interpreting. This gathering now has to do with collecting, right? In place of analyzing, we can put that under the umbrella of presenting, interpreting, and collecting, all right, or analyzing. Okay, so after you are analyzed, then you now have to what? You now have to interpret. After let's put all this gathering, analyze, and everything under gather your data, right? Then interpret it. The interpretation now. All right, interpretation here now makes it understandable to those who are not an accountant, right? But those that make use of this financial information, they are called the users of financial information, right? This interpreting makes it easy for them to comprehend, all right? And when you are interpreting, it has to be as accurate as possible, right? And this will help them make accurate decisions. All right, make accurate decisions. This is the three processes involved: gather the data, interpret, and give it to the users of financial information to make accurate decisions. All right, so we have that as that. All right, so we have accurate bookkeeping, we have records, we have measuring and interpreting the financial results of the business by preparation of accounting ratio and communicating these results to management. All right, it's still the same concept, just like what we have been seeing. So now let's talk about the nature of accounting. All right, the nature. Let's talk about the nature of accounting. Just like we've been talking about what accounting is all about. Now I want to talk about the nature. Now, when we say nature, all right, accounting process, all right, or possesses. Now, accounting possesses different nature when examined. Now, you are going to realize that as we are examining this thoroughly, all right, we realize that it possesses different nature. All right, accounting, its nature, all right, is different. Now, let's talk about it. Now, accounting as a profession. Let's look at accounting as a profession. Now, when we say accounting as a profession, it is a line of career, or a choice of career. A choice of career. All right? When we are talking about accounting as a profession, we are seeing accounting as what? A choice or a line of career. All right? This is, and it's highly identified. All right? It's highly identified with acquisition of special skills. All right? This has to do with acquisition, all right, of specialized skills. Acquisition of specialized skills or formal education or training before rendering this service. All right, rendering the service of an rendering the service. All right, acquisition of the specialized skills. All right, formal education. All right, / training. All right, before certification. All right, not until you are certified, then you cannot say, yes, you are an accountant by profession. All right, not until you are certified. And we have certain professional accounting bodies. Professional accounting bodies. All right, we have ICANN. All right, and we also have ANAN. All right, we have ICANN, we have ANAN. All right, ANAN. Now when we say ICANN, we're talking about the what? The Institute of Chartered Accountants of Nigeria. Institute of Chartered Accountants of Nigeria. Institute of Chartered, all right, Chartered Accountants of Nigeria. I think I need to switch this marker. All right, and we also have ANAN, which is the Association, all right, Association of Nigerian National Accountant, Association of National Accountant of Nigeria, Association of National Accountants of Nigeria. All right, there are two acknowledged, certified, all right, professional accounting bodies. All right, we have also, let's look at accounting as a language. All right, when we say accounting as a language, all right, it means what? A means of communication. All right, as a language, talking about a means of communication. Okay, here we're talking about using of some certain words, some certain terminology, all right, that we have the debit side, all right, we have debit side, we have credit side, right? These are accounting terminology, all right. Language, because what is used in communication in business, all right. Okay, so we have that as that. Accounting what as an information system. All right, this is where we talk about income, expenditure, profit, asset, liability. All right, accounting as an information system. Also, we have accounting as a service activity. Right, this has to do with, right, accounting. You know, accounting is not buying and selling. Right, you offer a service. As an accountant, you offer a service, right? So it can also be seen as a service activity, all right, where you provide service to both government organization and non-governmental organization. All right, when we say accounting also as a science, all right, we're talking about, accounting is not a pure science, sure, but it does follow some systematic and organized body of knowledge, all right. So it's what? Accounting as a science, all right, as a science, follows some certain systematic, all right, and organized, follows certain systematic, all right, and organized body of what? Body of knowledge. Okay, but it's not a pure science, right? So we have that as that. So we have qualities. Okay, the qualities of good accounting information. It has to be relevant. All right, we have qualities. All right, it has to be relevant. It must not be out of context. It must not be out of date. It must have a purpose. All right, enough facts. All right, must be purposeful. Relevance must be purposeful. Objectivity, it has to have enough facts, not written by sentiment, all right, or being biased. There's no out of biasness or sentiment. It has to be what? Complete. It has to be timeliness, all right, timely. All right, it has to be what? Complete. It also has to be accurate. All right, book of accounting should be accurate, should be up to date. It also has to be flexible. All right, flexible. All right, so I just mentioned of a few. And also we have what we call, okay, I think Okay, let's quickly take this before we call a wrap for today. Now we have what we have here as cost accounting. Right? When we say cost accounting, what are we talking about? It is a branch of accounting that is concerned with how to fix costs. Just like the name implies, cost accounting. Right? It's a branch of accounting. Alright? It is under accounting itself. Okay? That's cost accounting. Alright? It's a branch of accounting that is concerned with how to find out the cost of goods produced or services rendered. Alright? Concerned with cost findings. Alright? Concerned with cost findings of the production, alright, of goods and productions of goods and services, right? Finding the cost implication, the cost involved, right, of the production of goods and services rendered by an organization, all right? As that for that. So we also have what we call management accounting, and management accounting here is also a branch of accounting, but here, unlike the cost account that is cost eccentric, here management accounting is basically to provide information, right? It's just to provide information for organization management to take decision, all right? Management accounts, all right, provide info for the management, right, to make decision. All right, that's what it does. Okay, so we have that as that. Now we have that as that. Now let's proceed. We have auditing. All right, auditing. Now, speaking of auditing, auditing is said to be an independent examination. All right, when you independently examine, independent examination, all right, of what? Books of accounting. Now, pay attention to the word independent. An auditor, what? Does their job, or an auditor does his or her job without influence from anybody's, without influence from any external body, whether be it internal or external. That's why they work independently. All right. If you are hiring an auditor investigate just like a CID investigating a crime. They independently, all right, investigate, scrutinize, right, the books of accounts, right, record and financial statements of an organization, all right, and this person is independent and is referred to as an auditor, all right. We have public sector accounting. This accounting has to do with, all right, accounting service carried out at the local, state, or federal level, all right. Public sector accounting, all right. We have local, state, all right, and federal level, right. So the accounting activities carried out at this level, right. So who is an accountant? Right, we talked about what accounting is. Now, accountant is that person that performs, all right, the function, all right, performs accounting. An accountant is someone who has what? An accountant is said to be, all right, a person who carries out an accounting functions, all right. Accountant, all right, an individual who does the function, all right, of accounting, to perform the function of accounting, all right. So essential features of a business organization, we have business organization is there to make business organ. What are the essential features? Those four of them. 1, 2, 3, 4. profits making, all right, to make profit, all right, continuity, all right, every business tends to continue, all right. You also have element of risk, all right, all businesses bear risk, and we also have, all right, we have businesses involved, exchange between parties, exchange, all right, between parties, all right, to the communication and interaction with people that enhances the continuity of the business, all right. So we have some certain functions of the accountant, all right, some certain functions of the accountant, right. One of the basic options is that they maintain books of accounting. It's their responsibility, and we have certain books of accounting like, all right, these functions include the preparation of all subsidiary books of accounting, and we have subsidiary books of accounting, subsidiary book of accounting. We have, right, we have cash book, we have sales day, we have purchase journal, we have return inward, we have journal, we have petty cash, all right. We have, all these are subsidiary books of accounting, all right. We have journals, we have purchase day book, we have return inward day book, return inward, all right. We also have return outward, we have journals, a lot of them, as mentioned, but a few, all right. So we have that. They also are in charge of investigating service, also service and tax services as well, and all this makes up the function of an accountant, all right. So on this note, I'm going to call it a wrap for today. So thank you very much, everyone. For as many of us who attend the class, big thank you to you all, and let's do all to bring our notes up to date, take a picture of our notes and submit them to our respective classes. Thank you very much, and I look forward to seeing you subsequent to have a wonderful day. Bye-bye.